Well, did you know that there is actually a war going on inside your cell phone, inside your computer, even inside your television? It is a war between the world's biggest semiconductor companies. And these are really the brains of the devices, with the US sanctioning China's largest semiconductor company called SMIC. What does all of this mean for US investors? Well, for more on that, somebody who knows plenty about that, James Early, the CEO of Stansberry China. James, welcome back to the program. It's always good to see you.
Yes, it's always great to be here too.
So, James, first off, SMIC makes like 5% of the world's semiconductor chips. I understand we're actually already in a shortage of global semiconductor chips. What are the implications for consumers, first of all?
Well, for outside of China, not a big deal. I mean, they do supply Huawei, which makes 20% of the global smartphones. That is a big deal, excuse me, especially for kind of the medium and lower tier consumers. For Americans, though, not as much of a big deal, but this is certainly a much bigger deal if you're a Chinese consumer. And by the way, just a point on SMIC, these chips they make are about 10 or 11 years behind in terms of technology. So it's like people fighting over an iPhone 2 or an iPhone 3. It's certainly not cutting edge technology.
All right, well, that's a very fair point because I don't know anybody who uses the iPhone 2 or 3 at this point. Well, of course, we want to talk about how this impacts U.S. investors. I understand Qualcomm, which is a U.S. chip maker, is actually SMIC's second largest customer. So you've kind of talked about what happens to Huawei as a result of this, but what happens to Qualcomm and those invested in it?
Qualcomm stock is up 33% since like its August lows. The market, I've never seen a market, Jessica, where good news is good news and where bad news is also good news.
Yeah, that doesn't make any sense.
Yeah, there's nothing keeping these companies down. Now, Qualcomm is already shopping around for alternative make. Qualcomm, if you're just new to this kind of stuff, it designs the chips, but then it finds someone else to make them. And SMIC was one of those someone else's. Now it's trying to take its business to Taiwan, for example. So it will still get by. I'm not surprised that it's not beaten down terribly.
There is a sort of trickle-down effect, though, right? Because we did see, for example, this Japanese memory chip maker called Kioxia decide not to IPO because of this news. How much of a decrease in value in the stock market itself could we see because of the chip war?
China has been buying like twice as much or spending twice as much money on semiconductor imports than on oil imports in recent years. So there is no doubt that over time, if China is just simply not vacuuming in the semiconductor, either the chips or the machines to make the chips, those companies are going to suffer in terms of revenue, but we're just not seeing it in the stock market yet.
Okay, so maybe it's something we should be aware of as US investors, because obviously tech stocks are really what's driving the NASDAQ and what's driving a lot of our portfolio growth if you're invested right now.
Yeah, that's true. That's true. But, I guess the other thing we could look at is, this is sort of a microcosm of deglobalization. This is a mini version. It's going to happen more and more, starting with semiconductors, which are huge for China, but it's going to expand to other industries. We're going to see the Chinese version and the rest of the world version. And we'll see who wins. But obviously, globalization was good for humanity for a reason, and now it's being undone. So yes, we're going to be affected. It's just not happening yet.
I want to read you a quote from Scott Foster. He's an analyst at Lightstream Research in Tokyo, and he recently wrote, "Has anyone calculated the valuations of American companies assuming no further growth in sales in China, declining sales in China, or no sales in China at all? Not only technology companies are at risk." And I think what he's referring there is this idea that the Chinese may in turn blacklist American companies as retaliation for this particular sanction against their chief chip maker.
Yeah, well, if they blacklist the companies that already aren't doing business with them, that's sort of like quitting after being told you're fired, right? It's not going to have a big effect. But if they blacklist other firms, then it would. And it's not just to American companies. I mean, it's global companies. It's going to affect the whole world. We may suffer less because the U.S. has a naturally stronger economy, but this is going to affect Europe. It's going to affect Australia. It's going to affect South America. China buys from everybody. This is a glimpse into the future of what we're going to see, and we'll see what shakes out. I think we're going to have a stronger divide between companies who will do business with China and companies that won't. It's kind of like children of divorced parents who want them to pick a side. I mean, that's the world we're living in.
You mentioned how much business the US does with China vis-a-vis semiconductor chips. Obviously, the year began with the phase one trade deal between the US and China has to meet certain objectives in order to meet its obligations under that deal. And one of those is buying a lot of stuff from the United States. What could this mean, this sanction, basically limiting what the US can sell to China, mean to China's ability to make those goals a reality?
It's going to kill an already impossible deal in the first place. I mean, China was what, 1/3 of the way in to buying, which means not even close. And to be fair, they did have a virus, so so did we. So I mean, that's an extenuating factor. But semiconductors were a big part of that. So now you take that away and forget it. There's just no way they're going to make that the ends. They're going to meet their end of the deal. And of course, they're going to say why. Well, guess what? Not only do we have the virus, but it was your fault, the U.S., because you put these sanctions on us.
So I just want to go back, James, to your earlier point. Fundamentally, it sounds to me like you don't think that U.S. tech investors need to be concerned about a trickle-down effect of these sanctions against SMIC actually affecting the value of their investments.
Yeah, I wouldn't be concerned right now, and the market is obviously not concerned. I mean, these are older generation chips. You know, there's a global ecosystem for this, and so these places can go elsewhere. But I do think they are underestimating the impact of a true decoupling, of a true deglobalization. You know, we're just dancing to the music as if the party is never going to end. I don't think people realize just how much trade happens between the U.S. and China and between the world and China. And if that starts to go away, and especially if that starts to get hostile and nasty, you know, we're going to see that in the markets. Mark my word.
Yeah, I absolutely agree with you. Thanks so much, James Early, CEO of Stansberry China, joining us there. And if you want to see much more of our content, please always find us on YouTube, Facebook, Instagram, LinkedIn, and Twitter. Thanks for watching.